Hello, everyone. My name is William Mucker. I am a client executive with Camaplan, and I would like to thank you all for joining us for today's webinar, Investing in Underappreciated and Overlooked Emerging Markets with Josh Ziegelbaum of Legacy Group. As a quick note, please be aware that Josh will be answering questions at the end of the presentation. However, feel free to use the chat and Q&A function on your screen to pose your questions whenever they cross your mind. They will be saved and addressed once the presentation portion ends and the Q&A portion begins. Before we get started, we have a brief disclosure to go through. Everything presented in today's webinar is strictly for educational purposes. Camaplan is a neutral third-party administrator of IRAs. We are not attorneys, CPAs, or financial advisors. If it comes to a time where you need advice in any one of those fields, we highly recommend you consult with your team of professionals. We are more than happy to be a part of the dialogue with your team of professionals to make sure the investment process is quick and seamless. We do not sell any investments at Camaplan, nor do we endorse any products. We will never call you about the next best investment opportunity. We believe that you should always do your own due diligence before investing your money, whether it be your retirement funds or otherwise. Once you have found the investment that is right for you, we will help you open your account, fund that account, and facilitate the transaction into that investment. Here is my contact information. If you or anyone that you know who you believe can benefit from the information have any questions about what is discussed in the presentation today and how it applies to self-direction, please do not hesitate to contact me. I would be more than happy to help. And without further ado, I'll pass the controls over to you, Josh.
Thanks, Will. Appreciate the introduction. Just give me a moment while I pull up my slides here, and then we'll get started with the presentation. Okay. We are all set. So I'm going to be discussing the advent of investing in underappreciated and overlooked emerging markets. We're going to talk about emerging markets in general. I'm going to talk about Colombia, which is the go-to market that we're invested in at Legacy Group and where our portfolio company, Green Coffee Company, is. Then we're going to pivot over to a use case example of that company. I'm going to show you some of the details of the Series C funding round that we're wrapping up, and then go through some projections. And then we'll have some time for Q&A at the end. So without further ado, let's get right into it. So Green Coffee Company is our flagship company. Like I said before that, let us talk about emerging markets. I'll do an intro on myself first. My name is Josh Ziegelbaum. For those of you who don't know me, I'm the Director of Investor Relations at Legacy Group. We're an asset manager, a private equity firm with a strict focus on Latin America. We focus on investment opportunities that produce high social and environmental impact. We do regular reporting for our investors in our portfolio companies. They hear from us regularly every 3 months through our formal quarterly investor updates. We also do live Q&As, live webinars with Q&A every quarter as well. And then we send regular updates to our investors on alternative investments, emerging markets, weekly through our regular email communications. So the case for emerging markets is a special one. Right now, recently in the last few years, I can say we can extrapolate to that. The US dollar has strengthened substantially. Hi, Bill. I think we got cut out here. Let me pull up the slides again.
Oh, sorry about that. Yeah,
Okay.
Yep. You're coming in good now. It looks like there was some sort of connection error.
One moment, please. Sorry about that. Did you catch my commentary over the emerging market slide that we were on here?
No, cut out right at the beginning of it.
Okay. So let me take you right to here. You can hear me loud and clear, correct?
Right now, yeah, you're coming through
All
loud
right.
and clear.
All right. Sorry about that technical issue. So We're going to be talking about the case for emerging markets, okay, and what we're seeing at Legacy Group on the ground in the markets and where we operate. So the US dollar has strengthened substantially in recent years, particularly against global emerging market currencies. So US dollar investors, all else equal, have a significant market opportunity in foreign markets due to the strength of their US dollar. They're increasing their purchasing power going into those markets and really outcompeting non-dollar investors. This kind of opportunity that we're seeing in the market is something that could likely only happen once in every investor's lifetime, once every few decades, and really presents a perfectly constructed moment for US dollar arbitrage. So what does that mean exactly? So the current market opportunity for investors coming from the US, or those that are deploying dollars, are seeing a historically strong dollar. They're also seeing overpriced investment opportunities here in the US. It's no secret that real estate, while it's cooling down now, is running hot in terms of pricing and lack of affordability for new entrants to the market. Stock market, publicly traded securities here in the US, whether that's fixed income or equities on the stock market, they're seeing a lot of volatility and uncertainty. But we are seeing a decrease in prices for assets and businesses abroad, especially when you're taking those US dollars and converting them to foreign currencies in order to make those investments. And we're also seeing a decreased competition for foreign assets and people that are going into emerging markets who can compete with dollars. So that's kind of where we enter a Legacy Group and bring in these emerging market investment opportunities to our investors, which we'll dive into later on in the presentation. Before we do so, I want to talk a little bit about Colombia. Colombia is the longest standing democracy in Latin America. And when you think of emerging markets, you'll often think of Asia, maybe some parts of developing Europe. But with the global macroeconomic uncertainty that we're seeing and global tensions, people who are looking for emerging market exposure, they want to be closer to home. So we think Latin America is really an excellent market to look at, particularly Colombia. And we at Legacy Group have been on the ground operating in Colombia for over almost 10 years now. So we believe that US-based accredited investors should focus on the country of Colombia if they're looking for outsized financial returns, particularly in agriculture, in real estate, and technology, for which sectors are booming in the country there. Foreign direct investment into Colombia is experiencing exceptional growth, presenting investment opportunities for foreign investors. There's really limited access to local capital in Colombia, so it makes international investment more valuable to Colombian businesses, and it provides unique and interesting opportunities for them. Investing in the country provides benefits in legal protections, which safeguard investors' capital, and provides a really stable framework for them from a legal perspective. It has a competitive geographical location, and we believe it's the bridge between North and South America, which really differentiates it from other Latin American countries. We did a previous presentation on the alternative investment landscape in Colombia, and these are really the main points that we're seeing on the ground. There's high upside, low initial commitments needed. Colombia, as I mentioned, has favorable macroeconomic characteristics. The US is the country's largest trading partner. That should continue to grow over time. And the country has a long history of democratic institutions. We're also seeing, as you'll hear more about in my presentation to come on our portfolio company, Green Coffee Company, gaps in the business ecosystem that could be exploited, heavily so, actually. And there's a large domestic consumer market, and it's a great means of diversification with all of the, I would say, correlation in traditional asset classes that we're seeing now, whether it's stocks, bonds, cryptocurrencies, real estate. Everything seems to be moving in tandem here in the United States. So investors should look for diversification, not just among asset classes, but among geographies. And we believe Colombia fits the ticket there. So what are some potential risks to consider in investing in the region? With respect to agricultural investments, which we very much focus on at Legacy Group, adverse weather patterns are something to consider and how they affect yields in terms of crop yields, not financial yields, and what that means for investors. There's also changing macroeconomic conditions, And then as you look to exit the portfolio companies, whether it's through an outright sale or an IPO, the market's current appetite for exit strategies is very important. Be paid on the company going towards an exit. So macroeconomic conditions, if they continue to erode, something that could certainly affect the performance of an overall investment. Leading that to regulation and the political landscape, this is something we see in the US as well as abroad. Considerations around regulation and politics it's very important to consider. Also, when you're operating in any market, emerging markets, definitely is something that key personnel is important to. We see that also in the U.S. But if you're heavily dependent on certain personnel in those markets that have certain knowledge and expertise, that's something to consider if you're looking to enter into the market as an investor. Also, any hedging arrangements, if there's fluctuations in potential returns based on the US dollar versus whatever currency that you're investing in, that's something to consider. Industry-specific risks, agriculture was an example, things like weather, other things, let's use oil and gas as an example, heavy government regulation, kind of changing ways in which companies can drill or search for oil. That's something to consider if you're in that industry and in any market really, including emerging. And then ability to meet financial returns. That's a potential risk in any market, but in an emerging one, there's less visibility for investors as they're not on the ground there. So you really want to trust in the management team, their ability to put solid financial projections together, and of course, execute on that. So that leads us into the next subject of this presentation, which is a case study of our flagship portfolio company, Green Coffee Company. It's the #1 largest coffee producer in the country of Colombia. It's a really exciting investment opportunity. And we're currently wrapping up our Series C funding round. We launched this in September of last year. It's actually closing this month here in May. But I wanted to use this as a case study on emerging markets and to give you an illustration of how we deliver projections for investors and in a presentation format and how high net worth investors are able to participate in these types of offerings. So the investment structure for Green Coffee Company is actually US based. So even though this is an emerging market investment, investors own common equity in the US based parent. The Series C equity round is growth capital to further expand farming operations, build a US based roaster, and also a distillery on site in Colombia to create alternative products from the waste of coffee production. We are issuing $25 million in common equity. The pre-money valuation was $67.5 million going into the round, just under $100 million post-money, and the base share price in the Series C is $1,200. We're in the final tranche, and we set a deadline of May 31st. That's the day of this presentation, but of course, if anyone wants to discuss this further, I'm happy to connect after the call here or after the webinar. We have a 6% preferred return associated with the investment for years in which there's no dividend or cash flow. This is really a growth-oriented investment, but that preferred return accumulates in years in which a dividend is unpaid and will be caught up in excess upon exit. So where is the money being deployed in this funding round? It's a $25 million equity raise, but it's being done concurrently with $75 million in debt financing. You could see the bulk of the proceeds are earmarked towards farm acquisition payments and the development of infrastructure. Infrastructure being the processing facilities, such as wet mills, dry mills, and what's need to be done in order to process our farm direct world-class coffee. The US-based roaster is expected to cost about $15 million, and the distillation facility that I mentioned to create ethanol and vodka from the waste of coffee production is expected to cost around $6.4 million. The balance being working capital brings us to a $100 million total capital raise in Green Coffee Company's Series C funding round. Our story is really a special one. We became the largest coffee producer in Colombia from nothing in 5 years' time. And we built the company from the ground up with our capital and that of our investors. In 2017, we created the business. We wanted to challenge Colombia's traditional coffee industry methodologies, really been plagued by generations of lack of investment, particularly foreign investment. We wanted to take a fresh perspective on this, and we've executed on that thesis since 2017, and our ambitions continue to grow. In less than 5 years' time, Green Coffee Company became Colombia's largest coffee producer with over 9,000 acres of land and 11.5 million coffee trees planted. We did over 10 million in revenue last year, up from just 1.3 million the year prior, and we have more than $60 million invested to date. These are the key stats, some of which I just mentioned on the acre count. We have over 400 full-time workers, more than 450 investors who have deployed that $60 million with us. We have several awards and recognitions that the company has received. CEA Colombia is the Council for American Enterprises doing business in the country. We're a member of that organization, along with other multinational corporations such as Amazon, Coca-Cola, Pfizer, big, heavy multinationals that do business in the country. We also received an award last year, Best Technological Innovation in Agriculture from Colombian Congress. Our CEO and President Boris Woolner received that award from Colombia's agricultural minister. And we're really leading the coffee industry in several key metrics. Full-time employment is one, raising up the households that are in the regions where we operate, particularly those are headed up by single mothers, focusing on the circular economy to use everything in our farms to drive revenue, and increasing support for local farmers. We have a coffee cherry buying program where we pay fair prices for coffee cherries and provide an outlet for local farmers in order to sell their product and live better, fulfilled lives. So where we're going is, I think, what we need to really be excited about here. So we're going to continue to scale our farming operations through year end. We have a goal of getting up to 15,000 acres of land holdings by year end 2023. We also want to replicate our current production capacity. So we're building another wet mill and a dry mill in another region. In the Coffee Triangle is where we're focusing on due to its year-round production capabilities. It's a heavy spring harvest, and right now we're focused on really Q4 in the region where we have most of our farms. So getting coffee trees acquired in another region with a primary harvest in spring is instrumental in order to allow us to have year-round production. Beyond that, we expect to launch our own vodka and spirit products made from coffee byproducts. Background here is really important. 80% of the coffee cherry is typically waste product, with only 20% being the bean that we know and drink. So we're monetizing that waste product, and we have access to hundreds of thousands of kilograms of it per day from our processing facilities. And we expect to produce over 38,000 bottles of vodka per day at capacity from our distillery. Finally, is the US-based roaster. We're targeting Houston, Texas as a potential market. The team is in the US this week, visiting potential locations and diligencing opportunity on the roaster side. And we see a path to selling over 30 million pounds of roasted coffee a year going into our 2026 exit. So the team is really incredible at the company, and I'm very proud to be associated with them. Boris Woolner is the GCC's president and CEO. He's a 25-year veteran of Colombian agriculture, has strong working relationships with coffee distributors, government officials, among others. To his right is the GCC founder, also a board member, partner at Legacy Group, Cole Shepard, full background at PwC, doing mergers and acquisitions globally. To his right is Adam Jason, full career as a corporate attorney, board member at Green Coffee Company and partner at Legacy Group, representing companies in public and private debt and equity transactions in the US in his career. Below them, we have Leonardo Sanchez, our CFO, formerly the CFO at Fox Latin America. And then below them, we have our strategic advisors. I'll just point out Steve Oakland. He joined us at the end of last year. Steve is the CEO and president of Treehouse Foods. It's a publicly traded company in the US where Steve oversees $4 billion a year in food service revenue. Prior to that, he was the president at J.M. Smucker Company, president of coffee and food service. And Steve's experience speaks volumes about the expectations we have of him at the company, opening up inroads on the roasted coffee side. And we're really excited to have him join our team. There's more team members here and others that aren't on this slide, but I just wanted to point out a few of the key personnel at the company. So our execution strategy is based on creating value from 3 core pillars. Pillar 1 is the best-in-class farming that we currently do, continuing to grow our land holdings and control production at scale in Colombia. Like I mentioned, we're at over 9,000 acres today, and we're already the largest coffee producer in the country, but we're just not very far away from being the largest Arabica coffee producer globally with just several more acquisitions. Pillar two is to go vertical on this. So the business model today is green coffee sales, which is wholesale unroasted coffee. We want to go more vertical into roasted coffee for margin expansion. We believe selling farm direct roasted coffee will allow us to generate higher profit margins and get closer to our end consumer in our sales model. Like I mentioned, we see a path to 30 million pounds of roasted coffee going into 2026, which is expected to result in over 200 million in revenue in that year. Pillar three is the production of vodka and spirits from coffee waste. Background I already mentioned on the amount of waste product that's here. We see a path to our byproduct business generating 49 million in revenue going into 2026. And we never shared this goal with our investors prior to the Series C. It's one that our investors are really excited about and that we're continuing to update them on throughout this year. We have a whole series of videos on the distillery, which you can find on our YouTube channel. Lots of great content there to dive through in order to learn more about what we do. So total revenue forecasted in 2026, $266 million. This slide here, it gives you a really nice visual of pillar one. We plant the coffee in our nurseries. That's headed up by those single mothers who are heads of household that I mentioned. Once it's ready, it's brought out to our farms and planted there until it's matured. It's monitored by our agronomists until that happens. It's all harvested and hand-picked and then brought to our processing facilities in Colombia. Once milled, we go through quality control, and then we get it ready to be delivered to our global clients. We sell the coffee in two channels, primarily, in the local market in Colombia, and then in a wholesale manner to our global clients, which are large specialty buyers all over the world. So once it's ready to be shipped, if it's going to the port, we'll send it to Cartagena, which is about 500 miles from our farms. Once it's ready to go, we bring it there and we prepare it to be shipped to our global clients. This map will give you a visual of our growth through acquisitions over time. In 2018, we acquired this small green area, not so small, really, 600 acres, but relative to our full total land holdings it is. This slide here is an image up until September of last year. We did additional acquisitions, but what you see in this shaded area is 6,600 acres. We acquired just about another 2,500 acres since launching the Series C round. And we currently stand over 9,000 acres with some additional acquisitions at the end of 2022 and then here in early 2023. This visual here gives you a nice idea of our acquisitions over time. However, the town in the middle is the town of Salgar. We're the largest employer there. It's very much a coffee town. It's about 2 to 3 hours outside of Medellin by car. You can see the road in the bottom right-hand corner. We'll often take investors out here upon request, or we'll show them around our operations in Medellin. Our corporate office and our headquarters is located in the city of Medellin, and that's really our central location of the company. But we have operating hubs here in Salgar and our wet mills, and all the coffee is processed and grown in this region of the state of Antioquia. So pillar two is the large-scale roasted coffee sales. This slide has the pricing from September of last year, but it does give you a nice visual on all-in cost for green coffee as opposed to all-in cost for roasted and the margin expansion that we expect as we transition from green to roasted. You can see margins just under 30% on green and close to 50% on roasted. So the best way to drive future profitability for the company is to expand to the US market with roasting operations and sell GCC's coffee to bulk purchasers in that format. There's higher end pricing for our Colombian production. The US operations give us more attractive financing opportunities. This is really a culmination of that value add farm to consumer story. Pillar three being the vodka and spirit production. Slide just gives you a visual of the stats that I mentioned. Capacity of 38,000 bottles per day, projected revenue of 49 million going into 2026. This is just for a capital cost of $6.4 million and expected to be completed in the back ends of 2023. This distillery connects directly into our existing wet mill site. We already have the test distillery online, and as I mentioned, tons of videos on Legacy Group's YouTube channel if you want to see a visual of our distillery in action or any of our other initiatives. So this is most definitely an impact investment. Over the past decade, we witnessed dramatic changes in the global economy. Businesses and investors are less concerned with short-term financial gains and more concerned about being part of a new generation of companies and businesses that break the cycle of short-term thinking. By operating in this lens, we're able to identify opportunities that are usually overlooked. So things that we focus on will be value creation, efficiency, having a positive image. This is all because sustainability sells, not just in our coffee to our end buyers, but also as a company. As we look to sell this company or do an IPO exit, which is our preferred exit strategy, doing things right is important. All investors care about this in some way or another, and we believe that the company will receive a higher valuation at exit by doing things right. Some key impact initiatives here. I won't touch on all of them. The Sustainable Development Goals you can see on the left-hand side. Those are set forth by the United Nations and what we focus on. We have an entire presentation on impact, which I'd be happy to share with anyone. But I'll just touch on one of these metrics here, which is formal employment. 100% of our workforce is formally employed. You can see with the stats compared to the sector averages. Pension plans, we pay 75% of our employees into pension plans, with the sector average just being 1%. Healthcare coverage, I'd say even more dramatic. Sector average is only 3%, and we pay 100% of our employees into healthcare coverage. And we also provide formal banking, so helping people build credit, really lifting up the community, as I mentioned, well above the sector average in formal banking. And we provide equal employment for many people, a lot of things on the environmental side, reducing waste and water. And like I said, we have a presentation on impact. If anyone wants to see more on that, feel free to get in touch with me, and I'll share some more materials. So into what makes me excited, the exit plan and financial projections. So as we show our ability to replicate farming operations, grow our revenue channels, we believe the company will be ready for a profitable sale or an IPO in US markets. Some potential exit opportunities would be a full sale of the company through something like a corporate buyout. Think of like a large roastery that wants to control farms at origin, and we could certainly be an acquisition target for them. Also, another option would be a private equity buyout. We believe we could attract interest at scale from large buyers in the agricultural space who are looking to take over, I guess you could say, a mid-stage company and take it to another level. But what we see as the most profitable and most ideal exit strategy would be an IPO in US capital markets. We believe this will be available to us based on market conditions. It's already a US domesticated company. We have over 450 investors. We have 3 years of audited financial statements with RSM, and we're very much positioning the company for a successful IPO with a target year of 2026. And I'm going to get into the financial projections and how we modeled it, but we took a conservative price to net earnings ratio of 20x, which is the average of the S&P 500. The S&P 500 is usually made up of larger cap companies. So for a smaller company, we believe that this is relatively conservative. And we modeled an exit enterprise valuation of $1.2 billion, which is 20 times our expected net income of $60 million in our exit year. This is those returns, but in a financial summary and through a pro forma. Let me draw your attention to the basic income statement. You can see revenues are expected to grow from where they are today to over $266 million by 2026. We expect to phase green coffee sales into entirely roasted coffee sales and byproduct. So by 2026, 216 million in roasted, 49 million in byproduct, total revenue of 266 million. On that, we expect 86 million in EBITDA, 60 million in net, and then that flows down to our enterprise value expected at exit of $1.2 billion. You can see the bulk, if not all the return, is expected to be at exit, and we're forecasting an equity multiple of 11x on invested capital for our investors in green coffee companies' Series C funding round. So timelines are definitely tight here. As I mentioned, we're closing the round at the end of this month. That's today, May 31st. We're accepting final investor commitments this week. The reason being is that the round has been oversubscribed. So we launched this round in September of last year, a $25 million equity raise. We've received commitments in excess of that. And while we're having those investor commitments funded, we're accepting final commitments. So if anyone wants to participate, feel free to get in touch with me after this presentation. I'll put my contact information on the next slide. We have a $100,000 minimum investment. It's open for accredited investors only. We do offer a share price discount at investments of $250,000 or more. This is my contact information. You can reach me by email, investor.relations@legacy-group.co. There's my cell phone number as well. It's been great presenting to you all. If anyone has any questions live, I'm happy to dive into them here. We have some time allocated for Q&A, but otherwise I look forward to getting in touch with you individually offline.
Great. Thanks for the presentation, Josh. A lot of good information there. I'll give people a chance to pose questions in the chat and Q&A, but to get started, I mean, working for a self-directed IRA custodian, I'd be remiss to ask how you guys are structured to accept qualified funds from retirement plans, IRAs, 401ks.
Sure. So we absolutely accept self-directed IRA capital. We have many investors who elect to do so, especially given the high return profile. Investors love the prospect of investing in a tax-deferred manner or in a more tax-efficient manner, right? So I'd say a large chunk of our investors invest in IRAs, several of which are through Camaplan, of course. And we have a U.S. investment structure. So everything is common equity in Green Coffee Company Holdings, LLC. We are, however, elected to be taxed as a C Corp, not an LLC. So in the event of any distributions, you'd get a 1099 as an investor. There's no K1s associated with the investment. It's not subject to UBIT or anything like that. And yeah, self-directed IRAs are definitely a preferred investment strategy for our accredited investors.
Great. Thanks for that. Always good to hear. Another question: with the investment, a large portion of the investment, I would say, operations being overseas or a foreign operation in part, is there, I know you said you post videos to your YouTube channel about different updates. Is there any other ways that investors can receive updates about what's going on latest in the company?
Yeah. So we have an email newsletter. I'd encourage you to go to our website, which you can see on the bottom of this slide here. And there's a button on the very bottom where you can subscribe. We also have a deal room, so you can access our full investment materials there on the investment offerings tab. But I'd encourage you to subscribe to our email newsletter. We can also be found on social media. So LinkedIn, Legacy Group is on there, also on Instagram. I'd say email is our main driver, but we're active on social media. Our YouTube page is great. We have over 50 videos there, a lot of really cool stuff on Colombia, emerging markets, some interview style commentary and things that I think would be very valuable. We're also a contributor to NASDAQ. You can find some articles of ours listed on the NASDAQ website. Just type Legacy Group NASDAQ. You can see, I think there's 4 articles on there that we posted this year, and we'll continue to do so. So yeah, subscribe to our newsletter. And if anyone wants to speak directly, I'm always happy to get in touch individually. We can schedule a call and discuss anything you'd like.
Great. Thanks for that, Josh. It looks like there aren't many questions coming in at the moment, but I expect people to be watching this recording later to have some questions. So I highly encourage anybody who may not have a question now, who's live in the audience, to feel free to reach out to Josh about any questions in the future. Anybody who's watching the recording, please feel free to reach out, of course, like Josh said. And then if anybody has any questions about self-direction, my contact information is towards the beginning of the presentation. So feel free to contact Camaplan at any time. We'd be more than happy to answer your questions anytime. No dial directories. You'll always speak to a live person. We're always happy to help. So one more time, I want to thank you, Josh, very much for the presentation, lending your time to us with all the information you provided. And I want to thank everybody for joining us today.
Thanks, Will. It's been a pleasure. You have a great day. And thanks, everyone.
Take care.